Good morning, afternoon, evening, or whatever this uh, video may find you. My name is Vince Lansing. This is the JP Morgan walkthrough. We do have some, I think, important housekeeping notes to get through. First, I will be off next week. Their publication will not be. No morning market rundowns and no write-ups or analysis or opinions during the week. There will, however, be the same report insights going to you from the intern who's being broken in now. So copy paste, but a ton of material as usual, specifically related to gold and geopolitics and monetary matters. The second is Michael Oliver. You may or may not know him. He's a technician that we like. We like his stuff a lot. We've interviewed him here, and well, we from time to time show a clip of his work. Some insight or quote him like any journalist would do. And there's been enough interest on the founder's side to see if we can get a discount for if we can get a bunch of people who want to subscribe. And I'm hoping that we can get a discount. And a discount is related to, I guess, how many people are interested, genuinely interested. So I've already broached this with the founders. I'm going to breach it with the premium people too now, because we have such a small group of founders. Know that there is no financial compensation for this, okay? So basically, I get to share clips and insights that matter towards our pursuit, our complementary pursuit, and looking at markets, and he gets some subscriptions out of it. And I'm sure he's going to, say something nice about us if anyone asks. Maybe I'm not sure, but it would be cool. Anyway, he's a technician and we're not. So it's wonderful. Some of you may remember Michael Moore. We had a relationship like that before. Prideful moment, 44 stories in the last 7 days. Of those 44, 5 were originals a day. So that's, what's that, 5 sevens, right? And that's a very prideful statement to make, but the market has gotten busier and we have not slacked off. That's the stress test of what I've been trying to build here. And the big tent concept of all ways to look at the same asset is part of my intellectual capital. However, the stress test and building the infrastructure behind it and the systems and the logistics and the, coordination is like building a trading desk. And so a trading desk of news and information for precious metals is what we created here. And I'm just happy that we didn't just shut down one day and say, I can't take this, it's too busy. So knock on wood, that'll continue. Pullback. I want to also mention a lot of people are talking about pullbacks in gold, and there's all kinds of psychological reasons that's natural, especially after the big run up and the recent pullback. Excuse me. There is one that we sent to founders, and we cannot send it to premium because, well, for multiple reasons. But the main reason is if the info gets into the wild, the actual post gets into the wild, we would jeopardize the source. However, for premium right now, I want to explain the concepts to you a little bit because it is gold and we don't hold back gold information from people. There's all kinds of bullshit out there. Gold's overbought, gold's this, gold's that. Forget that. You have to look at the back test if you want to have a true opinion. And smart people have looked at relationships looking for signs. And one of them, he's one of the best quants on the street, and he's not a metals guy, right? So, but everyone's looking at metals now, whether it be to be bullish or bearish. Everyone's saying, "Hey, that's extreme. Let's see if it should continue." And this quant came up with back tests. It's basically HeartNet, but more intense. He came from the equity side and he said, "Oh, look at gold. Let's look at that." And he back tested 3 different scenarios that argue for the risk of a big pullback in gold over a 2-month period. One of them is easy to understand. You can look it up yourself. Second one is entirely equity economic based. And the third one is not easy. It's easy to understand, but it's hard to find the data for. All right, so I want to share those with you, with the premium people now. And those three go like this. When gold gets over 25% above a moving average, it has 4 out of the last 5 times that's happened, and it hasn't happened very much over the last infinite years. It retraces a lot, but it retraces a lot on average, right? And it doesn't happen a lot, so you don't have a lot of data. But if you want to get an idea of what this looks like visually, pull up, and I'm not saying this is what the moving average is, pull up a 200-day moving average and just go back and test it back to 1980. Now, that may not be easy to do for